Hey guys, welcome to a video breakdown of gold, which I sent in the Telegram group yesterday. I promised to do a more detailed breakdown of this trade. We had 250 followers in the channel, which is really big. We grew so fast in the last 2 weeks. Like, really grateful for all of you who joined and are showing interest. So let's dive right into this trade. First thing I do is always look at the higher time frame order flow. So you're gonna go all the way from the monthly down to the 15-minute. But let's just take the daily for now. So this high created on a daily was actually took almost the all-time high of gold, but didn't quite do it. And eventually we broke down structure. So I was anticipating there to be a continuation down, filling in fair value gaps. So if you go to the 4 hour, let's look at structure right now and where are the targets. So you can see we broke down structure over here. We had this low created, a new high created, and then we broke down. We broke further down, and now it's just inside another range. So this is the new trading range. We have created internal range of liquidity, which was a target for buys. You could have actually bought from down here and then into this area, which there's a mitigation block residing here and a fair value gap on the lower time frame. So my bias from the get-go was this almost stuff from I did a one-on-one Zoom session just now with someone, so this needs to be removed. So we're trading inside this range right now. And where did this react from? So I stated this order block with the mitigation block. So we know price is reacting off there and broke down structure after. Now, when we're breaking structure and we're leaving fair value gaps behind, that's a perfect target or point of interest to take a sell if we're in premium. So I've drawn this FIB already. So everything above this 0.5 is premium, everything below it is discount. So when we're trading inside a fair value gap on the higher time frame and it's in premium, and we're taking buy stops, which is what I want to see too. So there are buy stops over here. Even though this poked inside this fair value gap already, and it's called something, I will not talk about it on YouTube, but it's ICT's concepts. So we took this high, so buy side liquidity got taken from the internal range. We're in premium inside this higher time frame fair value gap, and now you go to the lower time frame. So this is the area from the 4 hour fair value gap. Let me remove the FIB. So this is the 4 hour fair value gap where the liquidity got taken. And you can see it reacted off this order block again. It can revisit an order block twice, so now we're going down into a lower time frame. So let's push this back to the back. So this is the 4 hour fair value gap. So this was our anticipated point where we're gonna see a smart money reversal. So when a smart money reversal happens, you don't have to get in at smart money reversal. You can just wait for a structure break and then get in on a fair value gap, which is what I do most of the times. So if you go to the 1 hour, you can see clearly a little, well, it's not clearly, but you can see a swing low here, because when you have one candle higher, one candle lower, one candle higher. So this is the last swing low, which got broken by this candle. Actually, the best entry would have been in this fair value gap, which was created, but yeah, I didn't take it over there, so like that. And you can see how it reacts off the mean threshold. So actually this was the best entry, but you don't have to you can get in multiple places, right? So when there's an imbalance created, there's a chance for you to get in on another day or in that imbalance. So we go to the lower time frame because we spot another fair value gap over here and a break of structure down here. So let me do it. So now I'm looking, where are the sell stops, where are the buy stops, where's the liquidity, where are the stop losses from the retail traders. So I've spotted this trend line forming, right? So retail is thinking every bounce from this trend line is gonna hold price. So I'm already seeing this trend line is a target. So I want to see all the points where the trend line bounced from getting liquidated, because there at every point there will be stop losses. So now we have this 1 hour fair value gap, right? Let's go into a lower time frame, the 15 minute. And actually I didn't have the best entry. We're gonna go in the best entry soon, but I took it straight up in this fair value gap and have a safer stop and put it above this order block. So there was also a breaker block. This whole down close, all these down close candles is one breaker block because it took liquidity and broke structure after. So I just took the first candle because I thought it lined up with the fair value gap and that would hold. So price overshot the fair value gap a little bit. And I'm gonna go dive deeper in a second why it did that. And as you can see, yeah, price is still closing. Notice how the bodies are still closing inside this fair value gap. So this indicates to me this fair value gap is solid and it will hold. So now you just wait for price to break down and don't go break even when you're like, this is 25 pips, so 25 pips is okay to go break even sometimes, but with gold you want to really look at what the algorithm is doing, right? So this was this candle prior to the down move left a fair value gap from here to here before this candle was created. So this one, this price needs to rebalance first before it can drop down further. So I waited for this candle to break down and we took this liquidity down here. So I was certain price should not go back to my entry again. And then you put your stop loss at break even, if that makes sense for you guys. So price broke down. This would be a sensible target for a first take profit, and that would be over 2R already, like 2.5R, 3R. Now this is NFP day, right? So price can be really whipsawy, and you can see it by this price action. So it almost stopped me out, break even, but not quite. So, and eventually the end result was we took this sell side liquidity, and you see how price reacts, right? We just poke just below, take out the stop losses, and we instantly retrace to look for another point of interest for the algorithm to reverse from. So apparently it was this point, and then we broke down and took the last sell side liquidity, which was the eventually my target for the whole trendline phantom to get liquidated, and it would result in about 5R if you do partials, maybe 4R. So that's already halfway from a challenge on my forex funds or something like that. And that's just in one trade. So you want the highest probability setups, right? And just take profit at logical points of liquidity. Of course, you can take partials earlier if you feel like this low got taken. You could have partialed there if you're more comfortable, and just go for that. Just do what's comfortable for you, right? So let's dive in deeper for the better entry. Because actually we had this order block over here, which was held by this fair value gap. So price poked in this fair value gap and then broke down. So this is this 15-minute fair value gap. Now you can see price reacting of this order block, right? So this is the order block. Put it on the right side. Right, so this was actually the best target or entry for the sell. So if you would have gotten in like that. And on gold, I try to keep a conservative stop because it can whip up really hard. So you still have an unfilled fair value gap here, but it's unlikely to be completely filled in because we already had a something ICT explains in his mentorship, but this is a indication it will not fill anymore. But you still can put your stop loss above here, and then your R would have been even greater. But yeah, you don't have to have that sniper entry to make a good trade, right? So this was the best entry, and some guys in the Telegram I asked someone, I asked some of you guys if you could find a better entry, so you guys found it already, so that's pretty good. So yeah, this is the breakdown of the gold trade. I hope you like it, and I hope you learn something from it. And all credit goes to ICT because he made all this possible. Without him, I probably would never could be able to trade like this. So yeah, and if you want to see analysis, I do daily analysis, posts like where my points of interest are and how the drawn liquidity should be. It's all in my free Telegram, so if you wanted to join that, you can do that at this link. I'll put it in the description too. And yeah, I hope to see you guys in the Telegram, and until the next video.